projects. It was $2.3 million. It was unrated, which is what these bonds would be as well. They would not be rated. We would not go to the expense of rating them. And so I feel confident because the schedules that Barb and Steve and I were looking at last week were right around a 2.6, and that was on a 10-year basis. And obviously, the longer that you go out right now in the bond market, the higher the interest rate is. And that's really because investors feel that probably in 12 to 15 years, they should be getting more for their money than the 2% possibly. So I feel confident in the rates that we're looking at and that we're in the neighborhood for a 10-year bond of somewhere around 2.6, possibly 2.7%. That probably is a small uptick from a couple, 3 months ago. But again, I think as the economy recovers, the stock market starts to boom a little bit more. You start to see the bond market slightly tick up. It does not move like the stock market. It does not move on a daily basis. The bond market usually takes a week, 10 days, 2 weeks to kind of move. And when it moves 5 basis points or 0.05% or 10 basis points, 0.1%. And the real reason behind that is because it's a very cautious market and it wants to make sure things are improving.
No ramifications from Detroit filing bankruptcy yet?
No, not yet that we're seeing. I think that, I'll tell you, I believe that people were anticipating that filing. I think that the market didn't react necessarily as some had thought it would react because I do think there was anticipation of that happening. I've been to Detroit a couple of times in the last few years. I mean, it is one storefront.